So in this episode, I'm going to be talking about a very exciting company that has been getting a lot of attention in the past couple months and is up over 200% since the start of this year. Now, despite this, I still think the company is pretty undervalued relative to their peers in this industry, as well as their future growth potential. Now, in this episode, I'm going to be breaking down HITIF, ticker symbol HITIF. So without further ado, let's dive right into it. Now, it's tough to find an overlooked and undervalued MJ stock these days, but HITIF seems to fit the bill. HITIF's portfolio includes a dominant presence in Canada's retail MJ industry, a global designer, manufacturer, and distributor of MJ accessories, along with a strong e-commerce platform. Now, in addition to opening a number of new retail dispensaries, HITIF reported great 2020 financial results, which included 166% growth in revenue and EBITDA of $8 million. Now, HITIF operates a chain of 73 retail cannabis stores in Canada under the Meta Cannabis Co., Canna Cabana, New Leaf Cannabis, and KushBar banners. This makes HITIF Canada's largest cannabis retail network by revenue and one of the largest by store count. The company is actively focused on growing its presence in Ontario, the most populous province in the country. By the end of fiscal 2021, HITIF expects to be operating 115 stores. HITIF's Amsterdam-based GrassCity.com is a leading online destination for cannabis consumption, accessories, and lifestyle products. In 2020, the site attracted more than 26 million site visits, 77% from North America. The company's site, CBDcity.com, which was launched in May 2020, is a platform for selling CBD products. Through Valiant Distribution, HITIF Inc. designs, manufactures, and distributes marijuana lifestyle products and consumption accessories. It has distribution facilities in Calgary and Las Vegas, Nevada. Of the more than 5,000 stock keeping units, 75% of Valiant's distribution catalog is manufactured in-house, allowing it to maximize margins. Valiant has partnered with celebrity brands including Snoop Dogg, Paramount Pictures, Hellboy, and Guns N' Roses. Now, last December, HITIF announced that it had submitted an initial application to list on the NASDAQ. Management said listing to the NASDAQ would enhance the company's investor profile and shareholder value. The initiative allows HITIF to accelerate its business strategy focused on the U.S. by attracting institutional and retail investors, as well as merger and acquisition opportunities. HITIF has already earned 23% of its revenue in the U.S. and is looking to expand its footprint in the U.S. in businesses that complement the company's business. Now, as for their most recent financial highlights, we're looking at their income statement from Q4 of 2019 all the way to Q4 of 2020. In each quarter, they increased their revenue, gross profit, and their adjusted EBITDA. In Q4 of 2019, they did around $11.4 million in revenue, with gross profit of around $4 million and adjusted EBITDA of negative $6 million. Now in Q4 of 2020, they did about $25 million in revenue. They had gross profit of around $9 million, and they had positive adjusted EBITDA of $3.6 million. In Q2 of 2020, HITIF became the first Canadian public cannabis retailer to report positive adjusted EBITDA. Now, HITIF has around 10 years of operations with two vertically integrated segments. They're Canada's largest recreational cannabis retail network by revenue, and one of the largest by store count. Additionally, they have two main online segments, which is GrassCity.com, which is the world's premier online store for consumption accessories and cannabis lifestyle products, and CBDcity.com, which is the world's newest online store for CBD products. As mentioned earlier, they have wholesale, which is Valiant Distribution, which is a global distributor and manufacturer of proprietary designed and celebrity licensed consumption accessories and lifestyle products. Now, HITIF has founded and co-founded many different brands that build out their whole entire portfolio. They're also acquiring notable companies such as GrassCity, which is really helping out build out their whole entire portfolio as well as strengthen their brand. Now, HITIF has been making a lot of strides within the past year or so, as they most recently opened their 75th branded cannabis retail store in Canada just about a few days ago. However, they also just did a capital raise of about $23 million, which helps add some cash on their books to be able to continue funding out their growth plans. Now, one of their main brands is Canna Cabana, which is Canada's one-stop shop, and they currently have about 37 locations now open. What's notable is that they have the highest average rating by independent customer reviews among all retail chains. Now, as recently mentioned, one of the growth strategies is to do a lot of mergers and acquisitions. Now, acquired as a part of Metagrowth in November 2020, they acquired New Leaf and Meta, which adds on a total of 34 stores to their whole entire portfolio. Now, they currently have about 75 stores open. However, their target by December 2021 is to have 115 stores open. Now, some of the key notable financial metrics is that pro forma, the company is currently the largest single Canadian cannabis retailer by sales, which is approximately 29% larger than the next biggest competitor. Not only that, but they also have market-leading gross margins at around 38%, so it's clear to see that they have very healthy financials. Now, another notable acquisition is with Brandz City, which is the world's top accessories e-retailer. They have a very large US customer base, and they've seen over 30 million page views and over 15 million site views in 2020 alone. Now, they see Brandz City as a strong strategic fit as it really works in with their Valiant distribution. Now, because they have vertical integration and own both manufacturing and distribution, it really builds out their margin expansion through this vertical integration. Now, another key highlight with HITIF is with their wholesale business. Now, they're one of the first companies to first secure licenses from movie studios, musicians, and other celebrities for consumption accessories. Now, they have very notable celebrity licenses that really fit up the demographic within the space. Now, they have licenses with Snoop Dogg, Cheech and Chong, Trailer Park Boys, Kevin Smith, Guns N' Roses, and the list goes on. And these are really famous, notable players within the space, and it boosts to their overall brand image. Now, to sum it up, HITIF believes that they are a compelling investment opportunity in a retail-focused cannabis leader. They have a loyal built-in audience across Canada and over a decade of retail presence. They also have the perspective of a manufacturer, distributor, and retailer on the hottest cannabis products and accessories. They have strong wholesale and retail infrastructure with a focus on sustainable growth across Canada and internationally. They're at the forefront of industry on leasing and quality of retail locations, and they also have a history of growth through operating cash flows and retained earnings with the strategic investments by Aurora and Afria. Now, on March 1st, HITIF announced its financial results for the fourth quarter and fiscal year ended October 31st, 2020. For the fiscal year of 2020, HITIF's revenue increased 118% year over year to $83 million Canadian. Its gross profit increased 172% to 31 million Canadian. The company reported a full year net loss of $6 million, a significant improvement over its 2019 net loss of around $26 million. HITIF's 2020 adjusted EBITDA was roughly around $8 million compared to its 2019 loss of $16 million. The company's fourth quarter revenue increased 118% year over year to $25 million, while its gross profit increased 112% to around $9 million. Now, in this fourth quarter, they reported a net loss of around $1.3 million, as opposed to the year prior, which was a loss of $15.4 million. They ended this quarter with cash on hand totaling around $7.5 million, and its cash balance has increased significantly since then to approximately $38 million to be able to fund further growth activities. Their CEO, Raj Grover, says, "We continue to run our operations tightly, ending the year off with record levels of revenue and adjusted EBITDA. We are excited about our trajectory in the US and continue to prioritize and look for opportunities in that market." Now, there's a lot to love about HITIF. The company is expanding its retail footprint, and it's already the largest legal MJ retailer in Canada by revenue. The company has also improved its balance sheet through several transactions. Despite the global slump in retail sales, HITIF closed the year with a healthy adjusted EBITDA, making 2020 the best year in the company's history. Looking ahead, its first quarter revenue is projected to be in the range of around $37 to $38 million, compared to around $13.5 million in the same period last year. That bodes pretty well for HITIF stock. So with that, guys, that was my breakdown of HITIF. Now, HITIF is a Canadian company, so currently they're being traded on the OTC, or over-the-counter market. So you can think of the OTC market as a transaction just between two parties. So there's going to be a lot less volume, and it's a little bit more risky of an investment. Despite this, they are actually planning on uplisting to the NASDAQ, and they're actually going to be reviewed by the SEC later in April. So if they are able to get listed on the NASDAQ, they'll be able to be listed on a lot more different brokerages, which I think would really help them get a lot of exposure and would help push up the stock price as well. Now, some of the key things that I look at when investing into a stock within this space is definitely in their balance sheet. I like to see how healthy of the company they are, how much cash they have relative to their liabilities. The next is to look at their growth rates and how fast they're actually expanding into different markets. And lastly, I like to look at their profitability to see if they're either on a path to profitability or if they're already churning a profit now. Now, the great thing about High Tide is that they have a lot of cash on their books, which is able to help fund their further growth plans. They're growing very fast at over 100% year over year, and they're actually expanding rapidly with over 75 stores currently right now, and they're planning on getting 115 stores in total by the end of 2021. Lastly, they're the first Canadian company working in the space to achieve adjusted EBITDA profitability. And as they begin to scale, they're going to start churning a lot more gross profit, which in turn helps out with their net income. I really like High Tide's management as well. I think their CEO, Raj, is doing a really good job of branding their product as well as making strategic acquisitions to continue growing out their whole entire portfolio. And as for the valuations, they're currently trading at a forward PE of around 70. However, they just turned a profit this year, so I don't think we should look into that too much. I'm looking at more so the price of sales, which is currently trading under 2. Now, comparing their valuation to other companies within this same industry working in the same market, like Hexo, they're trading around a price of sales of around 8. And they're currently doing around the same sales as well as revenue growth as well. So it makes me think that either Hexo is severely overvalued or High Tide is actually undervalued. I believe High Tide's growth story is really strong as they continue to acquire a lot of other companies and a lot of different brands. And as they continue to expand across Canada, they're also trying to break into the US as well, which will serve as a huge market which they can tap into. I like the fact that they have a lot of notable partnerships such as Snoop Dogg and Cheech and Chong, which I'm sure many of you already know that they have a lot to say in this space and a lot of reputation, which will help back up the brand value. Now, of course, this is definitely a bit more risky of a play. However, I think there's a lot of positive tailwinds that's going to keep pushing this business model and this business to do well over the next coming years. And the fact that they're actually trading pretty fairly valued right now makes me seem like it's a pretty attractive investment opportunity. Now, I've actually built a pretty small position earlier this week, and I plan on slowly building into it over the next coming weeks. With that, I would love to hear what you guys think about this company, as well as what you plan on doing with the stock. You guys know how it goes. With that, thanks as always for sticking around. I'll see you in the next one, and let's go get that bag.